Managing Director and Co-Head of India Investment Banking Vertical with Credit Suisse. Sumit, good morning. Thank you for joining us. Sumit, the lay of the land is that 30,000 crore has come into India by FIIs.
Good morning.
India economic data is not impressive at all. Hopes of a modest recovery also has got diminished by earnings and by what data points we've got from auto companies, airline companies, and for that matter, insurance companies. So if the near term is unlikely to change, why the interest in the QIP market is so strong and so unreal?
So there are few points around this interesting question that there's a bit of a dichotomy between financial economy and real economy. Now, if you really dissect, it is not just a question of whether there is slowdown in economy or not. Globally speaking, there's close to about $17 trillion of paper which is on negative yield. So when a foreign investor looks at relative market positioning, I think India still offers that growth and movement. QIP is reflective of the primary capital into the economy. So generally speaking, the investing community has definitely a preference. And if you'll observe, one of the other things, this year the QIPs on an average has been of significantly higher size. So last year, like in 2018, average QIP sizes used to be roughly about 80 to 100 odd million dollars, 25 of them raising $2.5 billion. This time it's been far and few, 10 raising $4.5 billion. What that means is there is higher quality papers coming in the market, and which investing community loves it. That's why I think they're chasing.
The large blocks which have happened are largely in, let's say, a Bajaj Finance, in insurance, in some promoter blocks. So what is your understanding about where the flows are likely to move?
See, sectorally, I think, so there's a supply side and there's a demand side. If you really look at it, growth-related capital has been raised from financial services. Some part has been from other capital-hungry sectors like real estate. This year also equally saw a couple of transactions being done. But the secondary story is very different. So when you say insurance, AMCs, many of those, these are not businesses which need too much of capital. And that's why you find that there's a significant amount of secondary supply given the valuations have been rich. Many of these private equity investors came in early, and they definitely have gone through both the cycle as well as looking at the valuations, want to post-seasoning exit. So we do see that significant amount of secondary supply from either promoters or in instances the sponsors. Also, what we have seen some part of, I think I heard earlier Pankaj comment, the lenders also exiting from their collateralized inventory position. So that level of secondary supply will continue. I think you mentioned insurance as a space. We do find that there are specific owners who definitely are looking at it too.
Okay, in which sectors or pockets do you feel we might actually start to see some fundraising activity coming in where there'll actually be interest or appetite as well? We've, of course, watching out for divestment. That's the one big cue. What's the kind of appetite you think we'll see there? And which are some of the other pockets or sectors you feel we're next going to see this trend in?
So it's interesting, last couple of quarters, we've seen that corporate India has been actually more in a hunker down mode. But in recent few months, at least I'm seeing a little bit of an green shoot of animal spirits coming back. There is a little bit of a movement. There's a little bit of a desire to want to at least, some of the consolidators make certain capex and move forward in the context of absorbing greater growth. And I think in that context, one is finding some of the traditional sectors, and not like services, but like either infrastructure-oriented, manufacturing-oriented, industrials, and some part of, the better quality real estate paper. Many of these, if you look at it, they've been keen and desirous. Sri Cement, I think I heard was being mentioned, $300 million of fundraise being done. There is roughly about 75 odd corporates who have taken enabling resolution to do QIP. That's 2020. If you think about it, 18 had 25 issuers, 19 had 10, and we have 75 outstanding enabling resolution out there right now. And unlike the last couple of years, it's not BFSI, it is a lot more broad-based. Some of these sectors, I think traditional sectors will bounce back in the context of raising more capital.
Right. We were just wondering as to what happens when this entire divestment exercise actually is undertaken by the government, which is right now only an idea on paper. Hopefully, we should see the execution soon. But do you think that's when we are going to see more of such deals come in? And will that really, in a sense, bring in the animal spirits back into the market?
I think, frankly, market in Indian context, at least, India is a growth economy, and therefore investors get enamored more by growth capital supply rather than, let's say, any secondary nature, be it divestments or be it sponsor stroke promoter blocks. But at the same time, the nature of supply, unfortunately, in Indian ECM space has been more secondary nature, which means even the divestment that you spoke of. Does that lead to more excitement in the market? I think from the investor side, they are segregating more from the quality of paper and businesses. Some of the divestment assets that you've spoken of are in certain instances almost like oligopolistic business or near monopoly businesses. So I do think that investors will definitely be looking forward to supply of some of these interesting businesses.
Sumit, where do you think there is need-based fundraising which is likely to happen? Which are the sectors, companies where you are getting a sense that, look, we want to raise capital because that's growth capital? One is, you raise capital when markets are out. I don't think Bajaj Finance needs that much of capital because for stock price is at 7-time book, they've raised capital for good during good times. Where are you getting a sense that companies are telling you, Sumit, I think the business is looking strong, we need money, and that is growth capital?
Yeah, so I would say there's obviously, as you said, one is growth capital, second is balance sheet fixing capital, and other than lenders where there has been raw material, so which is why you see the Axis and the Bajaj type of transactions earlier this year. But on the growth side, it's generally speaking more into spaces like manufacturing, like Sri Cement, or it is in infrastructure space where there is a desire now to figure out ways to deploy more and more. I think some of these sectors in last 3 or 4 years, they have not seen much of primary equity going in. Majority of these have somehow managed through private equity stroke private capital of whatever nature. And I think that is the supply. If you look at and analyze the 75 odd enabling resolutions, which is, like I said, is reflective of a good good percentage of primary capital which will go into the economy from equity capital market side. I think majority of these are from the traditional space of industrials, some manufacturers. There are 1 or 2 pharma issuers as well. Generally, last few years has been services sector dominating. I do feel that 2020 you will find manufacturing and infra dominating.
Sumit, then we've seen a couple of deals from promoters, compulsive deals, Bajaj Capital, Bajaj Consumer, I beg your pardon, one in Z, the couple of other block deals which have happened in Imami. Are you also getting a sense that a lot of promoters where pledge issues are there, they could also be coming to the market in order to raise capital? And do you think that is something which we could see more and more?
So good question. See, reality remains there's a bit of a have and the have-not divide which is happening in corporate India. Promoter issue may not necessarily be a company issue. A lot of these situations you'll find that actually the company balance sheets are quite squeaky clean, no debt, and yet there's a promoter supply which is happening, which is because of the promoter level borrow. I don't think that the entire deleveraging at the promoter level of borrow is yet done, and that inertia of motion will continue. There will be more and more supply of promoter sell downs which will continue to happen. I hope it's more for good reasons of deleveraging rather than lenders taking over and selling, which are generally speaking in a more distressed kind of an environment. So, but I don't think at a promoter level corporate India is as yet fully deleveraged. 18 and 19 saw specifically 19 saw a lot of activity on that front. I think 20 is expected to see that process continue until we finally come to more a fag end of promoters feeling comfortable around the deleveraging at their own levels. Those companies specifically raising primary capital, I think it's less likely. Not getting into specific names here, but if the company balance sheet is strong, I think that distinction has to be made that even if promoter is struggling, you will not find primary raise in those companies.
All right. Thanks so much for joining us then this morning and taking us through your perspective on things.